Jim Paulson is chief investment strategist at Wells Capital Management. He oversees more than $355 billion in assets, and he does expect the S&P 500 to trade in the range of 1,100 to 1,200 until we get some clarity on the U.S. economic situation. Well, Jim joins us now from Minneapolis, Minnesota. Jim, I called you a permabull, but perhaps I should maybe describe you more as the eternal optimist, right? Because you're not always bullish on stocks, but you do have a long-term view.
Yes, I do. I'm less a trader, Lisa, than I am an investor. And, we've had about a 15% pullback here in the United States, at worst maybe 18 or 19. That's almost exactly what we did last year during the 2010 soft patch. It's not going to be a straight line, but I think we're still up, 85% off the recession lows back in March of '09. I think it's been good to be bullish. I think it's probably going to stay that way for those who can withstand all the volatility we're suffering. I think we're going to break out again to the upside eventually.
I know that you're saying probably, though, until we get some clarity on the U.S. economic situation, we're going to stay in that 1,100 to 1,200 range on the S&P. But you also think there's downside risks there. You're saying that we could drop below 1,000. But what's the catalyst? Is it events in Europe? Is it U.S. economic data? Because today's housing sales or home sales number didn't seem to create quite a stir in the markets.
Yeah, Lisa, I think we're going to be, you can't get too excited where we are within either closer to 1,100 or closer to 1,200. I think it's just volatility. It's just VIX during the day. We're going to eventually break out significantly above 1,200 or drop significantly below. And I think over the next couple months, we're probably going to break one way or another. Ultimately, I don't think it's going to be Europe. I don't think it's going to be what the Fed does. I don't think it'll be the president's job bill or debate on the debt ceiling. It's going to come down to whether or not the data in the United States does show the economy falling off a cliff into recession, or whether we're not going to have a recession. And I think that might become clear to investors within the next couple of months. And if the data holds, even if it's soft, but it isn't recessionary, then I think we're going to break to the upside fairly significantly. Alternatively, if unemployment claims, if weekly chain store sales and the like starts to really cave and showing a recession is coming, then I think there's also, like you said, downside risk probably below 1,000 on the S&P. My guess is I'm fairly encouraged so far. We're 6-7 weeks past the collapse of the stock market in early August. And most of the high-frequency data is holding in there. It's not robust, but it's certainly not suggesting a recession. And if that continues, let's say, beyond the October jobs report, I think greed is going to build again here, Lisa, with a lot of investors looking at about 11 times $100 year-end earnings.
Well, at some point, right, cash is just not paying enough, and certainly a lot of fixed income isn't paying enough for many investors. So let me ask you, back at the end of August, in that context, you had been a buyer of industrials. You also like technology and emerging markets. Has anything changed in your investment thesis since then?
The only thing really that I guess at the margin change is technology's done really well on a relative basis. I think it's sort of interesting that we're sitting here talking about recession when the S&P 500 retail stocks have broken to an all-time record high relative to the stock market, and the S&P 500 technology sector is at its highest level relative to the market since the recovery began. And you think two of the most cyclical sectors going to new highs is a message that stands very in contrast to the recession story. But because technology stocks have done very well, I wouldn't be a big buyer of those right now. What I would be doing is focusing my cash flows, lightening up on the consumer staples, the steady Eddie utilities that everyone seems to like, and maybe take the proceeds and go hunting on down days at the industrials, the basic materials, the manufacturing stocks, if you will, here in the United States, and then also looking at the emerging stocks. They've really taken a hard hit, and I still think they're going to be the growth leader in the world, and I think this is a great entry point for investors that haven't been there.
What about taking a look at energy? And we were talking to Adam about silver there, as well as gold and copper. How about some stocks that are related to those sectors?
I think we're close to that. Now, the basic materials, I'd already be a buyer in there, even though they're still falling pretty hard, and that includes some of the metals. But I'm almost more interested in like copper and some of the industrial metals here. On the oil front, I am getting more interested for the first time in a while there, but the oil stocks are underperforming so much right now. I think I'd let them find a bottom here, let oil maybe find a bottom, and then I think that valuation-wise there is some attractiveness. The thing that makes me interested in those basic materials and energy is we've had this big safe haven run up in the dollar, Lisa, here over the last couple of weeks, which has really hit commodity markets. I think that might take a pause, and if it does, you might see a bid coming back into the commodity markets and into those basic material stocks as well as the commodity price themselves.
And Jim, 1,200 for the S&P 500, is that, do you think, something that's doable by year end, or is that really something in first half of 2012?
Well, I'll tell you the truth. I'm still hoping we can make a run far above 1,200 before the year's out. If we find out we're not recessing, I think people are going to look at those $100 earnings, and rather than paying 11 times, maybe they're going to pay 13 or 14 times. So I think we might have a shot yet of making a run on the highs that we were at earlier this year. We'll see. Maybe that's going to prove to not be the case. But I just think if we break much above 1,200, Lisa, we're going to hit 1,250 or something, and you're going to have a lot of short covering, which could create some excitement to the upside before the year is over.
All right, Jim, I hope that's true. I'm keeping my fingers crossed, but it is nice to hear someone who's that optimistic. Jim, it's always a pleasure to have you here on Fast Forward.
Same. Thank you very much, Lisa.
All right, take care. Jim Paulson, Chief Investment Strategist at Wells Capital Management, joining us today. Well, coming up